time to dive into the latest jobs data. For that, I want to welcome in Peter Tuchman, Senior Equity Floor Broker, Trade Moss. Peter, it is always great to hear from you. The Einstein of Wall Street. You know, I've been a big fan forever. All right, so let's dive into this jobs report. The economy grew by 151,000 jobs. Okay. The unemployment rate came in at 4.1%, a little higher than expected on the unemployment rate. The jobs number a little weaker than expected, the employment number. What's your first initial take?
Okay, so obviously the initial reaction was one of a spike. And look, these numbers are fairly arbitrary in so many different ways. We've been hanging around 4.1% is reasonable because for a number of months there we were at 4.2. Yeah. So even though their expectations and they were looking for 4, I think that was that was really pushing it. Okay, 151 versus any kind of growth in this economy right now. The market is looking for something to grab its teeth onto. Right, we've had a week that's been really brutal. Yeah. Right, obviously. What is taking people by surprise is Mr. Trump's ability to disseminate information. Mm-hmm. We're getting information all day long, minute by minute, which, look, this is the way he does things, right? It's a bit of a sparring match, right? So, and it's a way of getting his friends and his foes to the negotiation table yesterday, and we've seen these spikes, 1,000-point spikes all week long. So the market is just ripe for anything that seems positive, and I think we're doing okay. Look, we spiked up. We were up 15 handles. We came back in.
We came back down and then back up again.
So look, I think anything short of something about tariffs that seems a little bit positive, the market's going to grab a hold of and be happy with.
Given the kind of back and forth about tariffs and trade tensions, how much of a concern is it, and how much it seems like that's really what's driving the sentiment this week? Is that accurate?
Absolutely, all week long. I mean, it's really been one of tariff chaos in so many different ways. Just because we're getting so many mixed messages coming out of the Oval Office. We're in negotiations. We're going to impose them. It's happening now. I'm going to push it. You know, we've seen that in Trump 1.0. We saw that a lot, where he would throw out a story with a wide swath of surprise, and then he would pull back. And we've seen it all week long, and the market has literally been trading off of this anticipation of tariff. We still don't understand, and I'm not sure the Oval Office understands who's going to benefit, who's going to suffer, right? And so we are at odds with this, and the market's at odds with it. We had a major breakdown this week. We were down. Look, the highs were 6,100 S&P. We're at 5,750 here. Yeah. So we've lost some ground, a little more ground than I thought we were going to, right? And some GDP numbers came in midweek, which were a little bit disappointing as well. So the market has been really, so much anxiety has been thrown at the market this week, and I'm just hoping that this, look, I mean, any kind of a spike and any kind of green, in my opinion, right now is a good one.
So then the jobs report being read through as a positive. In terms of the level that you're paying attention to, we had one of our senior analysts, or senior correspondents actually, on the show earlier saying to the upside for the S&P 500, he's watching for 5840. To the downside, he's watching for 5650. And if we break through that, he said, be careful, because then you're watching for 5575. Does that resonate with 100%. You, those levels?
That 5850 level was one where we hit a couple of times this week, and then we reversed. Whether it was a bit of a technical reversal, or it was a function of the fact that that Mr. Trump had changed his mind midday. I mean, markets can handle anything except surprises. And when you're giving them mixed messages all day long, they are really trying to position themselves. There's a lot of volume here on the floor this week. I'm seeing huge influxes in the market. People are trying to figure out, whether is this an opportunity, or we are about to start breaking levels that we've not seen for a while. 5850 feels like resistance for me from this level. I did not think we were going to get to 5750. And so that 5650, 5850 level seems right to me. And, look, it's been a hard week. I'm hoping we end the week in a much more positive way. If we can stay away from any news about tariffs this week, or at least be given something that's concrete, then I think we'll get a heads up here. I'm hoping we don't break down from here.
So what other... It really seems to be, it's been this really headline risk that has kind of thrown cold water.
Headline risk. That is the nicest way of saying it.
I know. That's just really throwing cold water. And I didn't say that just because you drank your water right now.
We're throwing cold water.
What global events or economic indicators are you paying attention to that will matter, especially as we head into next week? Or is it more about what else are we going to hear about tariffs?
Okay, so obviously tariffs are the most overriding story because it does involve our place in the global picture, right? Because it is China, it is Mexico, it is Canada. And then obviously you've seen, we're still reeling off of the visit to the White House exactly a week ago around the Ukraine story. Now, where does that go? We saw a big spike in the defense stocks in Europe after the sort of debacle that happened in the White House last week. Where does that story go? And obviously you've still got the Middle East sort of looming. So there are a number of global stories, but there is no question that we're 2 months into the year. We are 1 month into Mr. Trump's administration. We're still trying to understand policies, and we're still trying to get a handle on the tariff story. And with all of that, there is economic data. This market, think about it. The market can do in a day, what used to take weeks and months, right? Sure. We literally can see 1,000-point reversals, and we saw it 4 or 5 times this week. So the volatility has been astronomical. However, yesterday, one thing to take notice of was that this VIX did spike up. The anxiety index, the fear index, spiked up to 2483, I think was the price, which was up, double-digit percentages, and surely for the week. And so there is anxiety in the market. The investing community is obviously fearful that this kind of volatility is going to break down. It's going, obviously, if they're looking at their portfolios, they're not happy this week. But 2 weeks ago, we had 3-4 days of back-to-back record highs in the S&P. So you realize that the ranges, we're in a world of new rules here, and you're seeing, you can literally go from a record high to actual bearish breakdown in
days.
Literally in an intraday level. Right? We saw this week, a couple of days, where the market really reversed thousands of points in a day, and so that's causing a lot of anxiety in the market.
Peter, thank you.
Always a pleasure.
Happy
I wish everybody.
Always. Longtime friend of show as well. That's Peter Tuchman, Senior Equity Floor Broker, Trade Moss.